Equities had a very hectic day, which started overnight with the announcement that the president had tested positive for COVID-19, and then the market sold off. We did hit a critical 3,300 level in the E-mini S&Ps. Interesting, we hit that same level 2 days ago. When we hit it 2 days ago, we rallied. And guess what? When we hit it today, we rallied again. Definitely helped by some of the payroll numbers. It was a mixed number, but low unemployment, certainly something that's a very positive, seeing the economy possibly continue to turn positive. But we spent most of the session struggling to get back to that unchanged level. We never quite made it, but it certainly put a dent in what we saw in the overnight declines. Interestingly enough, we never got back to the 50-day. Yesterday's settlement was the first settlement above the 50-day moving average since September 18th. So that will be the next critical level we watch. And that 3,300 level down below seems to be a nice place for support as we bounced off it several times over the last week or so. Looking at the VIX index. Now, the VIX index is kind of a measure of the market pulse. We never really saw a big spike higher, despite the fact that the overnight news about the president and the first lady. However, right now the VIX index has been trending lower. The surprise to me was more about the not seeing a spike above 30, given what we've seen not only with the announcement, but with the actual move in the equity indices. The market just seems to be very calm, almost reminiscent of what we're seeing over in the bond market, which is very low volatility and very low ranges. But the VIX index here waiting for that next move, but certainly not pricing in any fear into the market. And I think today's relief rally, another reason why we saw that the VIX index not really get much higher than 28, 29. Lastly, what do we have next week? Well, we've got a few numbers on the calendar. We'll be hearing from Mr. Powell on Tuesday. We'll have the FOMC minutes from the September FOMC on Wednesday. And then I think the stock market's going to be starting to look forward. We have all these events coming up, not the election, the Brexit, the economic recovery. Is there stimulus coming from Washington? What will the Fed do? But all encompassed in that, we're going to start to have earnings the second week of October. So that will be another distraction, I think. And at this point, the market right now, has a lot to look forward to, and throwing earnings in there is going to probably make this a little bit more exciting than it would have been otherwise. Lastly, I want to talk about the Vol Q futures, which will begin trading, volatility futures that will trade off the NASDAQ 100. Look forward to those to begin trading next week here at the CME.